Hello, guys. New week ahead, and let's see what it might bring to us these coming days. So, first of all, there is interest rate decision. Secondly, there is CPI decision. So, basically, data coming out. So, that is quite important, and I think that will define the next move for the markets. This week will be volatile, that's for sure. So, first of all, I would like to share you the chart for the some time I haven't shared that one for you, I guess. So here is this pink lines actually present the wedge which is forming, which were forming actually, and now right now there is a breakout, and we are testing 70k region. So therefore I suppose this looks bullish because here, as I told you before, actually this volume was falling, and also this wedge was forming to the actually small range. So that meant all about that there is breakout coming, and also it be fantastically aligned with the new week beginning. So, and therefore also we see this that actually already yesterday late night, actually this move a little bit started to the upside direction, and now it's continuing. So that is the good news for us, definitely. And secondly, I would like to also pay you attention why it might be the direction to the upwards. So let's go to the economic calendar, because the main things in the markets comes from the economic calendar, and the macroeconomics, the big moves, comes always from the supply and demand shocks, and those shocks are created by mainly by macroeconomics and monetary policy. So first of all, Monday is today, and today we saw bad, well, not bad actually, that, but the thing that data is red doesn't mean that it's bad. It's bad probably for somebody who thought that it will be green. For them maybe it's bad, but for everybody else I think it's just the data. Then there is nothing bad or good in the data, it's just the data. So, and first of all, ISM manufacturing PMI. So basically, that monitors also economic activity from the point of manufacturers. And here we see that actually this is red. Red means the number is actually lower than expected, and this is basically signaling below 50 means it actually signals for the recession. So what does it mean? With the next step, when the manufacturing is falling, the next step is actually, that means that basically demand is falling for the products. If the demand is falling for the products, that means also that inflation and the prices are going down, because there is simply a less sales pressure in the markets. So people are buying less, people have less money, so, and therefore they are also spending less, and that means that actually also inflation is falling, and most likely we will see this week CPI probably lower than expected, which is expected number is 0.4. Let's go to quickly to this expectation. Let's go which day actually it is. I think maybe on Thursday, as usual. So let's go. Here is the Canadian interest rate decision, also very interesting to watch. And then we see that here is okay. There is non-manufacturing PMI. That is not that important as manufacturing PMI, because that takes the most part of economy. And here on the, yeah, I think this is right. Thursday, yes. On the Thursday, we can see that there is this CPI data, and also big data from the European zone. So there is interest rate from the Eurozone too on Thursday, which is also quite important to monitor, because currently it is like, let's have a chapter a little bit about this also. So first of all, I think the European interest rates might be getting lower faster than actually the US interest rates, because in the European Union there is less inflation right now than in United States. So, and that means that we might see actually European Central Bank quantitative easing steps before actually there will be quantitative easing steps in United States. So there is also news regards jobless claims this week on the Thursday. So, and then there is also quite important regards the European Central Bank decision. Also, this ECB press conference have to watch what actually Lagarde is going to tell us. So, because this, as I told you, this interest rate easing step might come even in the next months. It's not gonna be this time, but it will might be on the June. So, on June is likely to be that important, and that's will be very bullish for the markets also. So, and here also we can see that average hourly earnings, that is also one other measurement which is actually showing how is the inflation affecting actually hourly wages. So, and there is also unemployment rate coming out on the Thursday. So there is a lot of news this week. So therefore, it's a lot of things will be happening this week, because we will most likely see from the this week data where actually the CPI also for United States is heading to, and where is going to be the next decision regards interest rate easing, whether it will be in the July, maybe August, maybe September. So therefore, let's see how the things will unfold in the coming week. That's regard economic calendar and economic news. Secondly, I also want to pay attention to chart wise. Actually, it's good to see the, as I told you, this breakout, but also I would like to pay attention to indices, and that is also quite important to monitor when it comes to crypto. You have to watch also what is happening with the index market. And actually, let's find out with US 500. So US 500, and here it's more important to look at daily chart. So basically here we see that there was this actually fall, and then we were going back even stronger and reaching new all-time highs, and now we are falling a bit again. So but this day, yesterday, actually on Friday, show that there is still huge buying pressure, and therefore we might see some cup and handle model here. As you see, maybe this is like a cup, and here might come the handle. Then we will see the next leg up probably. So never know for sure, but especially if the CPI will accept lower inflation, then I think that is the case, and that is the scenario for the markets. And for example, also if we look to the Vanguard SP 500 ETF, which is following SP 500, and is also looking very nice, almost on the all-time highs. So, therefore, also I believe when we will see the new all-time highs here, we might see also new all-time highs for the crypto, especially for the Bitcoin, a little later for the alts. Secondly, I would like to pay attention to also to the Hong Kong index, and the Hong Kong is actually representing China top 50 companies. So, and here we see that it is trailing downwards right now, but I think there will be huge resistance here on the region of 17,300, 17,900. So there it might stop and might go back to the higher highs, because if we look to the weekly chart, then we are actually uh, quite low with the index from the all-time highs. I think all-time highs are here on the 33,000. We are now actually almost double down. So therefore, for China, I think there is potential to come back to higher levels, but that's probably a little bit difficult to forecast because it's China and China is China. So, and therefore, also next one probably is European index, and European index is doing quite similar as SP 500. This is German 40, and here we see that is all again almost on the new all-time highs, as well as UK 100 index as well is almost on the new all-time highs. Right now it went to the new all-time highs, then currently there is some retracement probably to these levels, and then we can see the continuation. So if there is this, especially there is this monetary easing steps, then we will see the continuation. So that's all I wanted to tell you right now, and all basically I wanted to mention the most important triggers which might come this week for the markets to run higher or lower. So, and that's what I wanted to tell you. So as usual, be ready for the bulls, and that's also for our markets. And just let's get going. One more very important topic I also would like to tell you is VIX, actually volatility index. Chart wise, it's also a great measurement, because when it's like under 20, typically, it's called a zone when there is the risk actually that the market might fall. Because when the VIX is climbing, the markets are falling. When the VIX is falling, the markets are climbing. I mean, stock markets and crypto, most likely. So, therefore, and we are now with the VIX, we are very low right now. So, and that's also determined basically that there is always like the bullish and the bearish signs in the market. And however, it have been like that for the centuries. And anyways, as there is some data, basically still the indexes itself have grown thousands and thousands and thousands of percent over the century. So therefore, there is nothing much to worry about. There are like climbs and falls. Be ready for both. Enjoy the both. Use both on your advantage, and just enjoy the profits. So therefore, if you do not want to follow yourself, if you do not want to trade and backtest and do all the hard work for it to actually happen and to make money in the market, then there is simple solution for that right now. You can join our funds, which are slowly but gradually making nice profits. Somebody even will say that it's not slowly, it's pretty fast. It's around 10 to 30% per month. So, of course, if the market is like less volatile, there is nothing happening. It can be, for example, in next month, for example, there is June, July, it's summer months, a lot of vacations, probably less volume and less things will go on in the markets. And then there is also possibility that there will be less gains for our funds, because simply market will not move any direction. So therefore, it's not guaranteed that you make like 10 to 30% every month, but in average, when you take a year at least, then it will definitely show that performance. So thank you very much. See you.